Delaware tax deed sales. Here is how to buy a house for a dirt cheap price, just for delinquent back taxes. Would purchasing a property for 30 cents on the dollar work for you? Don't buy a property that you have not seen in a neighborhood you haven't evaluated. Properties are sold as is. What does that mean? It means caveat emptor, buyer beware. The redemption rate in Delaware is set at 15% and has a time limit of only 60 days. In the tax defaulted property business, you buy at auction. You get paid when you sell. The defaulting property owner has 60 days to exercise the right of redemption. If the delinquent taxpayer comes forward to pay, they must. Delaware is a small state with only 3 counties. The state statutes allow investors to make big money with redeemable deeds. The rate is 15%, which is the type of deed that the state of Delaware uses at tax defaulted property auctions. Delaware tax defaulted auctions are referred to as monition tax sales, and the county sheriff conducts the auction. Monition tax sales are a specific type of auction used in Delaware to sell properties that have unpaid delinquent taxes. These are overseen by the county sheriff and typically follow a legal process, giving the owner a final chance to pay their taxes before the sale. Kent County Sheriff auctions tax defaulted properties every 3 months. In Newcastle County, the tax defaulted auction is scheduled the second Tuesday of every month. In Sussex County, the auction is the third Tuesday of every month. The auction is a live auction, oral bid, shout-out auction, and the highest bidder is the winner. An oral bid is just what it sounds like. During the auction, bidders call out their prices aloud rather than submitting them in writing. The auction process starts, in my opinion, with boots on the ground. Ted Thomas rule number 1 for auction buyers is boots on the ground. Don't buy a property that you have not seen in a neighborhood you haven't evaluated. Pictures and videos are not boots on the ground. Hurricanes, building fires, floods, they all destroy property and sometimes land. If you don't know the property condition, property values, or the reputation of the neighborhood, I tell you, don't buy. Properties are sold as is. What does that mean? It means caveat emptor. This is a Latin phrase that means buyer beware. It's a warning to buyers that what they purchase at auction is sold as is, meaning the buyer is responsible for any problems that might arise after that purchase. Only uneducated speculators bid on property they have not seen and have not evaluated. In this business, you make your money when you buy. If you buy it right, things will go smoothly. If you pay too much, you could suffer for months. So when it comes to the auction process and rules, each county will have its own rules for the payment and the deposit process. If you're enjoying this video and want to join our journey to financial freedom, don't forget to like, leave a comment with your thoughts or questions, and subscribe to stay updated on all things wealth building. Also, unlock your exclusive free gift now by clicking the link below. Instant access awaits. Now back to our video. The redemption rate in Delaware is set at 15%, and just as importantly, the redeemable deed has a time limit of only 60 days. It works like this. The county issues a redeemable deed to the highest bidder. The defaulting property owner has 60 days to exercise the right of redemption. If the delinquent taxpayer comes forward to pay, they must deliver 100% return of capital to the highest bidder, plus a 15% penalty and other expenses. From a winning bidder perspective, this is a huge profit of 15% in only 60 days. In other states, Georgia, for example, requires a 20% penalty. However, the defaulting property owner has 1 year redemption. Texas, another redeemable deed state, has a penalty of 25%, and that right of redemption expires in 180 days. County governments in Delaware are separate jurisdictions and authorized to use alternative redemption codes, which does not require a court judgment. There's more than one way to conduct tax sales in the state of Georgia. Redeemable deeds are a big income generator for investors. If the defaulting property owner fails to redeem, the highest bidder at the auction will receive a deed to the property with no mortgage or deed of trust loan. In the tax defaulted property business, you buy at auction. You get paid when you sell. The margin between the purchase price and the ultimate sales price is your profit. Being a successful entrepreneur is not exactly a walk in the park. Attempting to travel through this minefield alone is difficult at best. There will be obstacles. A common question is this: how do I avoid overbidding? The answer to the question is simple. Before you attend the auction, know the approximate sales price of the property in which you intend to bid. Praying for an intended selling price is not a good business strategy. You must know so you don't bid too high. I'm Ted Thomas. I'm not an attorney at law or a real estate broker or a financial advisor. I encourage viewers to seek out experienced attorneys and financial advisors. I personally employ coaches that give me real-life, hands-on experience that they have learned from buying and selling at tax-defaulted properties. Check out our YouTube channel for more helpful information on this 200-year-old predictable, safe, and secure way of making money in real estate. Thank you for watching, and see you on the next video.